Ask Annex. Got a question for us? You head to the website, annexwealth.com. Look for the Ask button. If we can help, you always click that Get Started button. Sarah Kyle's in the studio. She's a wealth manager at Annex Wealth Management. Welcome.
Hi, Danny.
And we got Trevor Nargis, senior trader. Welcome to you.
Hey, Danny.
First question is anonymous. I have no idea how to invest in T-bills or other type of fixed income. Is this something Annex will do on behalf of a client?
So I would start off by saying don't worry. It's okay if you don't know. But this can actually be done quite easily through many of the major custodians that are out there. Some platforms have a separate area within their software dedicated to fixed income trading where one can look to invest in things like treasuries, CDs, corporate bonds, et cetera, et cetera. But to give you a short and sweet answer to the second part of your question, yes, this is something that our investment team and our traders do proactively on behalf of Annex clients.
Okay, our next two questions are actually graduation related, so we'll take the first one. My son just graduated from college and is already employed. His company 401k matches 6%. Should he contribute above the match or put the money somewhere else? He has an HSA option as well. He believes he can put away a total of 15% of his salary.
Well, that's great. Congrats to your son for graduating and having a job. What a nice thing to have coming out of college. But anyway, I would suggest for sure taking advantage of that match and contributing enough to get that match, but it's also important to have that diversified savings strategy, and it's a good idea to build up that emergency fund. So he should set aside a portion of his income to build up at least 3 to 6 months worth of living expenses. I would also recommend contributing to that HSA and maxing that out if he can. As you know, that's one of my favorite savings vehicles. It's also a good idea to start an individual brokerage account and have that disciplined strategy to contribute a certain amount every month. You know, that's more of a taxable account. That's money you can access now, and it'll give him some flexibility later on for spending. And if he has extra money at the end of the year, he can always contribute to a traditional IRA or a Roth IRA, depending on his income.
Next graduation question. Planning ahead. We have 2 grandchildren graduating from college next spring. We'd like to give them money, but believe there should be stipulations. Is that possible? We want to give them a head start, but want to avoid frivolous spending on their part.
Well, that is a very nice thing to do for your grandchildren, for sure. I guess if you want to give them stipulations, that would probably just have to be an agreement with them, unless you wanted to set up some sort of trust, but I don't know if you want to go to that expense. You know, you can offer to contribute to their IRAs or their Roth IRAs or do a match for them, but that's money that they wouldn't access for a while. You could also help them out with rent. But number one is education. It's really important to teach them how to save and how to invest, show them the power of compounding. You know, I think one of the nicest things you could do is really open up a brokerage account for them and buy some stocks or start having them contribute to it as well, and buy the stocks that maybe of companies they're interested in and get them involved early on investing and encourage them to start contributing to it.
It's Ask Annex. Next question. My wife and I are moving to another city for work. We're planning on renting for 12 months to get a lay of the land and see if we like it. We're selling our current home and should net $150,000. Where can we park that money that has enough liquidity that if we find something, we can access it for a down payment?
Yeah, there's a couple different ways that this can be done, but one really popular approach to cash management right now in an effort to capture some additional yield above what you might get in a traditional bank account would be money market mutual funds. When I say money market mutual funds, there's a couple different types of these, right? Many major custodians have them, but there's prime money market funds, there's government and treasury money market funds, and there's also municipal money market funds. Really, it's just a matter of what those funds invest in as far as their underlying assets. So things like prime money market funds tend to pay a little bit higher rate than what you see on some standard kind of broader scale money market funds. Prime funds tend to invest in high quality, short-term securities that are issued by things like U.S. and foreign entities, commercial paper, maybe treasuries, things like that. Whereas government and treasury money market funds tend to invest in short-term U.S. government securities. So what people like about money markets, in addressing the liquidity part of your question, one, they're able to earn some excess yield above what they see in the bank, but these funds are pretty liquid. If you sell, those funds are typically available the next business day. So while you're getting an attractive yield on those funds, it also keeps things fairly liquid for you so that if you need to pull that trigger and you find something that you like, you can go ahead and make a move.
And our final question on Ask Annex is from Kim. I watched a favorite stock of mine take a 40% downturn in the last 3 months. It's not so much a favorite anymore, but I have a hard time letting it go. How do I determine if it's past saving? At this point, do I just harvest losses?
Kim, I applaud you for reaching out because people like to talk about their winners. No one really likes to talk about their losers. So I think there's a little more to this question, though. Stock prices tend to fluctuate, and a 40% drawdown can be really hard to deal with. And when you see this kind of multiple contraction in a stock, it's important to revisit fundamentals and see if anything has materially changed with regard to how the underlying business operates. So it's important to look at the balance sheet, cash flows, and if the business is executing on its mission. There's been significant multiple contraction across many high growth names. Focus on the fundamentals, and if you're not comfortable with fundamentals, then reevaluate if it's worth holding.
Kind of a trader tip is you should have a stop loss when you are investing in stocks. Typically, you shouldn't let a stock go down 40% on you. After you buy a stock, you could easily put a stop loss limit in there, which means you indicate a limit where it will trigger a sell automatically. But now that you're down 40%, you really need to make 67% to get back to even. Like Trevor said, you have to do an analysis on, is there opportunity? Why was that stock high to begin with? Is it just coming down now because it came back down to earth? Because it was high and inflated just for no reason? So you really have to evaluate it. And in the future, I would highly recommend doing a stop loss.
Sarah Kyle, Wealth Manager, thank you.
You're welcome, Danny.
Trevor Nargis, Senior Trader, thank you.
Hey, thank you.